A fund of funds is an investment of a diversified portfolio of funds instead of holding direct exposures in stocks, bonds, or other investment securities. Compared to buying separate funds, investing in fund of funds provides the efficiency and the ability to spread the dollars among thousands of stocks with a single purchase. In addition, by investing in a fund of funds, investors can leave the asset allocation, fund selection, and monitoring to professionals. Before we go into the advantages of investing in a portfolio of global fund of funds, you should first ask these 3 questions. 1. Are you a fan of convenience? 2. Is investing a boring prospect but you still want to grow your savings pool? 3. Are you happy to let others sweat the small stuff while you get on with your life? If you answered yes to all 3, then Global Fund of Funds is perhaps made for you. Now, what are the benefits or advantages of a Global Fund of Funds? Generally, there are 3 benefits. First, the investor gets additional peace of mind through diversification. Investing in a fund is a bit like hiring someone to design or fix your home electrical wiring. Sure, you could do the research, buy the tools, and fix it yourself. But often than not, it's not only easier, but also safer to let an expert handle the problem. Hiring the electrician that can also handle the funds needed may cost you a little bit more, but it certainly saves you time, and there is no harm in paying a little more for a peace of mind. I, for one, would not want to get zapped for connecting the wrong wire or suffer sudden blackouts at night, or worse, accidentally burn down the house because of poorly designed electrical wiring. Similarly, some people would prefer a solution that gives a peace of mind, and Global Fund of Funds offers exactly that. Additional protection of multiple funds with much more diversity than one fund would typically provide. Where owning a single fund reduces risk by being invested in a portfolio of stocks, a fund of funds spreads the risk among hundreds or even thousands of securities contained within the funds it invests in. Not to mention, it also provides the opportunity to reduce the risk of investing with one single fund manager. That being said, the safety that fund of funds provide is not endless. If the overall market experiences sell-off, so would single fund and a fund of funds that invested in them. The second benefit of fund of funds is access. Investopedia, one of the world's widely followed financial reference portal, used the phrase high society for the little guy to describe fund of funds. Why? Because fund of funds allows investors with limited capital to tap into a diversified portfolio, some of which would be out of reach for the average retail investor. For example, some of the exclusive global funds offered typically have very high minimum investment requirements or would require investors to have a minimum net worth or both. In addition, investors with limited capital may not be able to afford meeting the minimum for several funds at once. Thus, investing through fund of funds gives the little guy with smaller purse strings the professional management and diversification that have often been reserved for the wealthy. In a manner of speaking, it's like allowing the little guy a piece of the high society world. Finally, investing through fund of funds is efficient as it provides the ease of handling and tracking with only one net asset value to track and buy or sell. In summary, fund of funds is a neat and hearty meal deal. You relinquish control on the grounds that the manager's choice will provide a positive experience, minus the hassle of making all the decisions yourself. In return, you get greater diversification, access to wide-ranging type of funds, and efficiency in investment. Using the example of a global equity fund versus global equity fund of funds, both will look to maximize income or returns from underlying investments. However, a global equity fund manager would utilize financial tools and techniques to estimate the future value of each stock invested to maximize the overall portfolio returns, whereas a global equity fund of funds portfolio manager's analysis would focus on identifying the best funds to invest in through full-blown due diligence or background checks of fund managers or funds. The analysis of funds would be based on factors such as its investment styles or strategy, historical performance, sensitivity to market movement in both up and down markets, and ultimately whether the fund has been able to consistently deliver risk-adjusted returns as per fund's objective. Thus, instead of bottom-up stock-specific assessment, the focus is on top-down fund-level assessment. In a way, one could say that investors get the best of both worlds. Let the underlying fund manager do the bottom-up selection while fund of funds manager do the top-down selection.